a saw, babe. You get a whip and I get a saw. One good trend pays for 'em all. Honey, trader, baby, mine. Now what do we do when we catch a trend, honey? Hey! What do we do when we catch a trend, babe? Whoa! What do we do when we catch a trend? Ride that trend right to the end. Woo! Honey, trader, baby, mine. Well, what do we do when we show a loss, honey? Hey! What do we do when we show a loss, babe? What do we do when we show a loss? When we kick that daggone loss to tops. Honey, trader, baby, mine. So you get a whip and I get a saw, honey. You get a whip and I get a saw, babe. You get a whip and I get a saw. One good trend pays for 'em all. Honey, trader, baby, mine. Well, how do we know when the risk is right, honey? How do we know when the risk is right, babe? How do we know when the risk is right? When you make a lot of money and we sleep at night. Honey, trader, baby, mine. Well, what do we do when the price breaks through, honey? What do we do when the price breaks through, babe? What do we do when the price breaks through? Hold our stops or and there's nothing to do. Honey, trader, baby, mine. They flash the cars, they promise the gold. They hide the fills while the stories get sold. Screenshots crop, no losses shown. Pay up front just to be shown the code. Show me the trade, show me the scar. If it really works, why guard it so hard? No secret rooms, no velvet lines. We learn in public, one chart at a time. You get a whip and I get a saw, honey. You get a whip and I get a saw, babe. You get a whip and I get a saw. One good trend pays for 'em all. Honey, trader, baby, mine. What do you do when the drawdown comes, honey? What do you do when it gets real big, babe? What do you do when it's even bigger? We stick to the plan and pull the trigger. Honey, trader, baby. Now what do we do with a hot news flash, honey? Nah. What do we do with a hot news flash, babe? Oh. What do we do with a hot news flash? We stash that flash right in the trash. Honey, trader, baby, mine. You get a whip and I get a saw, honey. You get a whip and I get a saw, babe. You get a whip and I get a saw. One good trend pays for 'em all. Honey, trader, baby, mine.
What are y'all doing here? I didn't expect to see you here this morning. Good morning to everybody. All right. The market gave us a sell signal today, which means we get out of everything. Get out of everything. So that will be the plan for that I'm telling you right now, the plan for the day, close all SGov, move everything, or close all SPXL, move to SGov. That's it. And I'm going to sit in cash and don't F up for a while. I don't know how long it'll be. I don't care to know how long it's going to be. It's going to be what it's going to be. What are you guys stressed about? Okay. I want to watch this video with you this morning. Apparently, the stock market panic has been explained by Joseph Carlson. Now, granted, I'm not going to say if he's right or wrong. All I'm doing is watching and observing, and maybe we can learn something together. Not the best screenshot to start on, but that's okay. That's okay. Let's go over to SPY real quick. Yeah, markets are in turmoil. Market panic to prices not seen since the day before. What am I missing here, JC? What's up, dude? What am I missing here? What am I missing here? Markets are in turmoil. We've been at the same price level since hang on, this date's in my way. We've been at the same price level since October. Markets in turmoil. Everybody lose your minds. Freak out. That's right. Freak out. Everybody freak out because the markets have crashed to levels not seen since the day before and are still roughly the same levels since they've been in October. Warren Buffett has this exact I didn't say it. Warren Buffett said it. It's a quote. I'm sure you can Google it up somewhere. Abraham Lincoln once said that everything you see on the internet is true. So yeah, I mean, that's where we're at today. That's where we're at today. So yeah, I'm probably going to have some strongly worded things to say about the stock market panic explained. Now, granted, if you own some of these stocks that have been decimated, in fact, let's go to the map, because there have been a few that have been absolutely destroyed lately. Let's go to like year to date. Where's year to date? Year to date performance. Now, even that's not that well. It's not as bright red, but some of these are getting hit pretty hard. Palantir down 20% year to date. Oracle 25%, Microsoft 15%, Nvidia down 6% year to date. But I mean, that looks like the worst of it. wait. Intel or Intuit down 32%. Yeah. Market panic. Shivering in my boots today. Yeah, I mean, let's be real here. Markets are panicking so bad. But then again, I don't know. I'm just a professional investor. I have no idea what I'm talking about, and I'm a random guy on the internet. So let's do this. Okay. Let's do this instead. There we go. A little bit smaller. Okay. The markets are in turmoil. Everywhere you look, stocks are crashing like crazy. Have you sold everything? Have you panic sold everything just to get to cash? Because right now, there is no safe investment out in the market. Or at least that's what a lot of YouTubers are saying right now, right? And I was just looking at the data right here. We are crashing to levels not seen since yesterday. We are crashing to levels, well, we've basically been flat since October. Markets in turmoil. We should be up 50% since October, right? Right? Oh my goodness gravy. Now, there are some things under the surface that aren't looking good, like SoFi, the greatest stock in the history of mankind, is in a stage 4 downtrend. It is in a stage 4 downtrend. Set your alerts. SoFi is trending down. SoFi bros, don't buy the dip right here because you don't know how far it's going to dip. SoFi bros, you want to buy the rip because, for a perfect example, you don't know how high it's going to rip. All right. AMD got some monkey hammering going on yesterday, but still it crashed to levels not seen since less than a month ago, January 12th. Right. And look at the support right here. Tell me order blocks don't work. Go ahead. Tell me order blocks don't work on the top side and the bottom side. Go ahead. Tell me order blocks don't work. By the way, you can have these exact same order blocks as me. You just go into our Discord, go into the FAQ and member contribution section. I'll show you where that's at. And then go down to Trading View, and then go to here. The official Deep Thought indicator is exactly what I'm using right here. So yours will look identical to mine. Okay. What about like Palantir? Palantir has been in a stage 4 downtrend as well, it looks like. Yeah. And is looking pretty nasty right here. What about Microsoft? Oh, yeah. Tell me that the market cycle is not real. Go ahead. I'll let you tell me, and then I'll prove you categorically wrong. What is the market cycle? The market cycle, I have 2 slides for this. I have multiple slides for this. Is stage 1, consolidation. Stage 2, big, beautiful uptrend where everybody feels like a genius. Stage 3 is where the moving averages start crossing over. Stage 4 is the big, nasty, scary downtrend where everybody says, go buy the dip. But unfortunately, they don't know how far down the dip is going to go, right? Stage 1, 2, 3, 4. Stage 1, 2, 3, 4. Wow, it's real. Let's do SoFi so you can see SoFi, right? It's right here. It's happening right now. It's in the anxiety denial phase, right? It's happening in your face at this very moment. No, it's not real. It's not real. It's not a real thing, Chris. Okay. Let's go to PayPal. This, my friends, is why you don't buy stocks in a downtrend. Ever. Right? Look at this big nasty sell-off right here, followed by, it looks like a 900% loss just after earnings after that point. I understand that mathematically it's not possible to have a 900% loss, but I'm doing it for comedic sake here, right? So there are some breaking points in the market. I'll definitely give you that, especially with like gold and silver going nuts, right? So silver going up like this, crashing down 30% in a single day, and now it's down 11% today, right? I don't know how many people I told that like commodities are not like stocks, right? Commodities in general can't just run up forever because the demand will wane and then they have to come back down to meet demand. And gold doing something similar. So I'm not surprised to see it come back. Honestly, I was thinking that it would maybe bounce or even continue up higher. I didn't think that was the top. But then again, I don't have to predict anything. In fact, by embracing that uncertainty, you can become a very successful trader. But I want to watch this video because apparently Joseph Carlson has the stock market panic explained. Stock market panic crashing to levels not seen since yesterday. Okay.
Yesterday, software companies crashed. They got pummeled. And even non-software companies, ones like S&P Global and Moody's, the big wide moat financial companies, they got crushed as well. And it all comes down to one thing, Anthropic. Anthropic and the threat of AI is now invading the global markets. We're going to be going over the whole subject.
What's an Anthropic? Y'all put it in the chat because I don't even know. What's an Anthropic?
We'll be looking at my portfolio and the $60,000 that I lost yesterday. We'll be going over my plans in the future. What are the best decisions to make in this type of environment? Now, of course, we have a lot of other...
Well, first decision is, do you have a trading plan? That is the very first decision you need to ever make in any market. Where did you come up with this trading plan? Is it gut feeling? Is it watching random guys on YouTube? Or is it data backed and you can prove historically, you know what? Given X number of occurrences, at least 50, you need to have as many as you possibly can. This plan works great. That doesn't mean that every time is going to be a winner. But historically speaking, the further out you go, the more data points you get, the more you can conclusively say, this plan has a positive edge. And if you don't have that, if you're just value buying, right, you're going to end up in a situation like the SoFi bros, who are saying, what a great price this is. I love SoFi at $20, right? I mean, I love SoFi at $20 when it was screaming higher, but I bet they don't love SoFi as it's screaming lower at $20.
A lot of other news to get to. For example, we have Uber that just reported their earnings. The stock is down after reporting. We have Google reporting their earnings. The decision of whether or not to keep your shares or sell out of Google and take some gains, that's one that we'll be discussing. And we also have the fail of the week, which in this case is Netflix's Ted Sarandos, the co-CEO, appearing before Congress. Congress has a way of asking business leaders interesting questions. For example, Ted Cruz asks Ted Sarandos, the Netflix CEO, are we on stolen land? That's true. He really asked him that. We'll be going over the whole exchange in the fail of the week. Now, we start things off today by looking at what happened yesterday. It was one of the most significant sell-offs, especially in a high-growth industry that we've seen for some time. Throughout history, software companies, especially ones that have...
So before we get deep dived into that, what I want to do is I want to pop into OVTLYR. Where's my button for OVTLYR? There we go. I got my Stream Deck buttons. I got to use them, right? First thing to look at is, let's go look at like XLK. XLK is the tech-focused ETF. Beyond QQQ, we're going to go into XLK. Now, I could be about to stumble all over the place, but looking at this, right, we see a lot of chop going on right here. But also a sell signal back on February 2nd, so a couple days ago before this big nasty move down, and it's been sideways, right? Now, XLK, again, focused in on tech stocks. This has been struggling for a minute. In fact, let's go into down here. We can see the tech sector down here has been getting less and less greedy, more and more fearful, right? And then we got a crossover on the number of buy signals versus sell signals a while ago. So it's been bearish on breadth since January 21st, right? There's a lot going on under the surface that would have kept you out of this trade had you had the data and had you understood how to read it, instead of just saying, it's a great stock, bro. Like, don't you understand how amazing it is to be on the future, the leading edge? You don't need to do any of that. You don't need to predict anything, right? Look at what the data is showing you. And right now, it's not showing you a lot of good.
that have that nice business model of recurring revenue, the subscription software companies, they've held a higher multiple because of the predictability and reliability and pricing power inherent in their business model. They have what's called sticky businesses, meaning that when people sign up for their software and they incorporate it in their business, it gets intertwined in their workflows, embedded in their processes, therefore making it difficult to move away from those applications. Those applications also update frequently, they offer more features, and they grow organically. Now, these companies, these software companies, typically, again, have traded at higher multiples because of the high margins, predictability, and reliability. Now, what happened yesterday is an escalation and a trend that Anthropic has been on for some time, and that is building out business-to-business tools. See, Anthropic is a bit different than most other AI models or AI companies. Most of them are focused on the end user, the consumer. You have OpenAI, you have Gemini, you have XAI, where people are downloading them on their mobile phones. But then you have Anthropic, which said that we're not going to focus so much on that. We're going to go straight for corporations. We're going to go for business utility. Just a week or so ago, Anthropic announced an AI plugin for Microsoft Excel, one that was highly advanced. It could do complex tasks just with text prompts. It could build out spreadsheets and DCF formulas. It can do lots of things that financial analysts can do right in Excel. It can also do things that data analysts can do. It can draw insights and retain context from what's going on in the Excel spreadsheet with no knowledge of Excel coding. Anthropic built that plugin, and it was better than Microsoft's Copilot. So we had a hint of it a week ago. Anthropic was building out tools on different verticals that are highly specialized for different types of jobs. Yesterday, Anthropic announced an AI automation tool specifically targeting professional analysis and financial and compliance work. This is legal work. So now they're moving from Excel spreadsheets to targeting entire verticals of financial compliance and legal teams. This plugin can supposedly do the grunt work that financial analysts and legal teams and compliance teams do, making that cost go down to essentially zero. Meaning that companies that make a lot of money with legal compliance consulting, financial analyst information, all of that type of stuff went down hard. And that included S&P Global and Moody's. From the Wall Street Journal, AI threatens Wall Street's cash cow, financial and legal data. The market's pricing in the
What is S&P? I think it's SPG, S&P Global, SPG. No, that's summer. What's the symbol for S&P Global? I've completely forgot what it is. SNP? No, I forget. Y'all tell me in the chat. SPGI. Thank you. SPGI. Thank you. Who said that? Side out. Thank you very much. I appreciate that. Gold star of the day. Holy goodness. Yeah, no joke. SPGI got absolutely monkey hammered. Holy moly. Oh man. Okay. But like you had a little bit of warning, right? Your 10 crossed under the 20 at least one day before this happened. So that would have been an exit signal had you been in it. Also, you had an order block right here. So there may have been some trapped buyers all the way back from September after that big nasty sell-off who were ready to sell out right here. And then some additional selling happened right after that, right? You had warnings, right? That doesn't mean that, of course, anybody can predict this kind of big nasty down move. But there were signs, right? There were signs that things were not looking all hunky-dory.
Anthropic is essentially going to be able to scrape and synthesize financial, legal data, and market data for free. And that a huge bulk of the work that companies like S&P Global, with their market intelligence, and Moody's, with their entire risk analysis part of the company, all of that's going to be automated, or at least dramatically cheaper, making it so that companies like S&P Global don't have the pricing power and the growth path that they once had. Anthropic exposed a perceived vulnerability in some of the widest moat companies that we've ever heard of, S&P Global and Moody's. These are looked at as the duopolies, the monopolistic companies, the ones that really can't be touched because they deal with such complex data and regulatory, financial, legal. That's the type of stuff that AI is not going to be able to do. Well, Anthropic saying, no, we can do that too. That messaging put a lot of pressure on these companies, but it also had a strong waterfall effect. Once the market realized that these type of companies can be impacted by AI, it was all bets off. Every single company is now being scrutinized intensely of whether or not Anthropic will be able to impact their business model, whether it will be able to do essentially the same thing for a lot cheaper or faster. The market acted swiftly to sell off potentially any company that had any potential exposure to AI disruption. We saw a lot of that yesterday. I'll highlight some of the companies that we talk about the most here, just to highlight how much they're down over the past 5 days. The biggest one that's down the most over the past 5 days is...
Hey, let's take a look at several of these. Okay, let's start with EFX. Let's start with EFX. EFX. I don't know what EFX is. Let's go look at it. So EFX is an industrial sector. Equifax. Huh. I would have thought that was in the I would have thought that was in the financials. That's weird. I don't know why it's located in industrials. Okay, whatever. Sell signal back on January 21st. What's happened since then? EFX. Sell signal on January 21st. Okay. January 21st is right here. Right, so you're already in a downtrend before that sell signal comes. And then since that point, you're down 18%. Ooh, okay. Let's go to the next one here. SPGI. Let's go back over to SPGI. Let's look at that one. I know we have SPGI. SPGI. Hang on. I texted Mahesh the other day when I couldn't find Celsius, and I know we used to have it. So let me add this CELH and then SPGI. So we just upgraded, and we're at now 9,000 stocks and ETFs. I swear I've had SPGI on here in the past. That's okay. We'll still go back over to SPGI. Since this cross, that's the best I can do for you right now. Since this cross, down 12%. Okay. Duo. Is that Duolingo? DUOL? Hang on. DUOL. There we go. Oh, hang on. This doesn't. How far back do I have to zoom to find? Yeah. Sell signal came on October 17th on Duolingo. DUOL. October 17th was right here. Right. You even had a 1020 cross, a bearish cross happen like the day after that. How much is Duolingo down since then? Oh, it's only 64%. Dip Finder. Dipfinder.com. The best way to lose your ass. I'm sorry. The best way to lose money. Dipfinder.com. It's going to be great. It's going to be great. Into it. Or in that's not, yeah, I into it. Dipfinder.com. Okay, yeah, into it. Got that sell signal back on January 2nd. INTU. January 2nd was right here. Okay, you got a bearish cross happen right there as well. Dipfinder.com finds you all the stuff that's going to burn up your dollars. Dipfinder.com, the best place to go to lose your backside. Dipfinder.com. Everything we talk about over here is losing money, so you should get some more of it, right? Buy the dip. These are terrible. Now, yeah, okay, Chris. Yeah, wait, where's the Joker? Okay, here we go. Gotta do my Joker voice, derpy Joker voice. Oh, don't you understand? You gotta buy the dips, right? No, that's a little bit of a Chris James in there. Oh, why don't you go buy that? No, that's still Chris James. I'm not going for Chris James. I'm going for derpy Joker. I can't even think of how derpy Joker would interpret this. Even derpy Joker wouldn't be buying dips like that. Goodness gravy, right? This is not the time to be buying these stocks, right? Not the time. But there are jokers out there who are going to scream, now's the time to go buy these stocks because you can get such great deals. But I'm telling you right now, you don't buy the dip because you don't know how far it can dip. You want to buy the rip because you don't know how high it can rip. Think of it logically. Take your emotional monkey brain out of it and think just for a second here. I don't know how far down it's going to go. I don't want to find out. But once it bottoms and it shows strength, I don't know how high it can go. Now that I'm into. That I can get into. Okay, let's keep going.
Is Equifax. Equifax had a massive sell-off yesterday, which I was very fortunate to have sold it before that sell-off. So that was some lucky timing. I did not.
But but don't you want to be buying things when they're such great value? Yeah, they're so cheap. What a beautiful value. Isn't it a great thing when it sells off? No, of course not.
Anticipate this happening. So this wasn't me thinking in advance that it's going to sell down and then timing it perfectly. In some cases, it's better to be lucky than good. This is one of those cases. Equifax.
You don't need luck. You need outlier. 82 cents a day. Then you'll see these sell signals on all the ones that he's talking about, how they came like literally a month ago before the big nasty downtrends, right? Now you can see how it went sideways for a minute, but then it got you out and didn't get you back in as it's crashing down. Again, outlier is 82 cents a day. It's probably a lot better deal in Dip Finder right now. I'm just saying.
like many of the financial companies reliant on data was crushed over the past 5 days, falling 14%. Then we have S&P Global. Now, this is a large holding, and I still maintain my position in this one. It is down 13%.
What? Bro, like even if I had held on to it for too long, even if, oh, that's right. For some reason it was glitching out. Even if this had happened, I would not be owning it. No way. No way. This is a big, giant regime shift middle finger saying, now's probably not the right time to own this stock. But you got to buy that dip. You got to buy the dip.
We have Duolingo over the past 5 days. This one's down 13% as well. The market's pricing in big disruption with Duolingo. This is one that I disagree with. I don't think it's going to be quite as bad for this company as what's being.
Remember, Duolingo is down 64% since the sell signal came through. Do I plan to trade in down market? No. I don't have any short signals. OVTLYR is built as a long-only platform right now. Eventually, we are going to build in short signals, but for right now, if the market goes down and it hits the points where I need to get out, like it does today, I'm going to sit in cash and not F up, right? Now, in this case, I will be selling my SPXL positions out because the SPY got a sell signal today. So therefore, the only thing to do is sit in cash, not F up. Now you can sit in cash, that doesn't earn anything, or you can sit in SGov, which pays about 4.3 APY right now, which is roughly half of what the average annual return is on the market at 4.3 APY with basically no market risk. So that's what my plan will be. So yeah, at some point in the future, we will have short signals, but it isn't today.
Being priced in. We also have Intuit. This is one that I've been concerned for some time that it would get the SaaS treatment, that it would be bucketed in with the rest of software companies and get evaluated like it's a Salesforce or Adobe. Intuit's down an astounding 12%. It's the lowest valuation it's been in years. Then we have FDS, which is FactSet. That's another data supplier company. That one's down 12%. FICO, like many of these stocks, has been a disaster recently. It's down 12% as well. We even have Spotify, which Spotify is down 11%. Is Spotify getting disrupted by AI? Well, we'll discuss. We have Moody's. This one was hit to a lesser extent. It's down 10%. We have Uber. This one's also down 7%. And then we have MSCI. This one's down 7% as well.
So who wrote this? Russell. It's hard to get out of a losing trade that opens railed down, only to kick you need the next day. Big money has all the data and resources and the insider info. Russell, I appreciate the comment, but I don't want you to feel like the market's stacked against you. In fact, I would say quite the opposite, right? Quite the opposite. Everybody has the same opportunity in the market. Everybody's trying to do the same thing. There's no bad guy with the Darth Vader helmet on the other side going, hang on, I can do this. I got a voice changer here. There's no bad guy on the other side saying, engage order 66. It sounds more like Bane than Darth Vader, but we'll go with it. Engage order 66 against Russell's portfolio. No. there's nobody on the other side saying we got to take this guy out, right? So, but to your point, it is hard to close. And from a psychological perspective, I get it. Number one, it's hard to close because you have to admit that you were wrong. Or change it. Change your thought behind it. I'm looking for a specific slide. Change your thought behind it. Instead of saying that you're wrong, say, it just didn't work out, right? It's fine. But most people don't want to do that because when you take that losing trade, you admit that the trade didn't work, and you're also cutting off any chance of it coming back. Now, you've got to do that because when you get in a situation where your stock goes against you, it's hard to sell because you're afraid it's going to turn around and go up, right? I mean, for what other reason would you not want to sell it? Because you have this fear, the psychological fear built inside of you and every human, which is what traders have to overcome, that if I sell, then I have no chance of it coming up. Outliers have to flip that on their head. And they say, you know what? I better get out because I don't want to get caught in this mess. I don't want to get caught in this mess. And things can get so much worse against you. Lucky Chevy says, take the haircut and avoid the sled ride. Yeah, I get it, dude. I get it. But this is what it's going to take to be a successful trader. You have to change your perspective, your mentality behind it. And listen, sometimes it will go up without you, right? If you're not feeling like an idiot often, you're not managing risk. You can take small drawdowns, feel stupid, and still walk away with your capital and your future intact. Or you can hold hope and on a rare occasion blow up. I don't want that to happen to you. By the way, Mark Minervini will be here 2 weeks from today. Mark will be here hanging out with you guys. How exciting is that? One of the greatest traders in the history of time, one of my mentors, Mark Minervini, will be here in 2 weeks' time. Oh man, I'm excited about that. Let's keep going.
And there's a lot more where that came from. So many companies were hit hard yesterday, and they're still getting hit hard today. If we look at my portfolio, this is one of the worst losses I'd say in the past few years in a single day. It was a quick sell-off. I lost around, between both portfolios, around $60,000 in one day. So around 5% of the portfolio. When we look at the categories here.
So this is one of those reasons why I don't like to do paper gains. I really don't like paper gains. And in fact, a lot of you guys are probably feeling that way too, because if you look at the 2026 portfolio, linked down below, right? My year-to-date return was over 50% at one point. It was over 50% at one point on paper. But those were not closed trades. They still had market risk. And even though we rolled it as much as we possibly could, by the time the trades were closed, it wound up being about a 4% gain. Now, because we're looking at it from the perspective of, oh man, it's not 54%, it's only 4%, that feels like a loss. But at the end of the day, when the trades were actually closed, had we not looked at the paper gains, we'd say, awesome. I'm nearly what half of the annualized return is for the market in one single month. There is a huge perspective shift here. The only difference is, are you looking at your account balances every day, at your dollars every day, getting emotionally wrapped up in what these potential things could be, picking out the color of your Lambo, picking out a new Rolex, versus at the end, when everything's closed, the reality of where did I end up is still really great. I have zero excuses on that. I have zero hesitations on that. Zero regrets on this. Because I could not have foreseen the future. All I had was a trading plan that has a mathematical edge. And all I have to do is let that edge play out. Right now, Plan M, our most aggressive plan, is sitting on a 12.2% edge. That's huge. That is a huge edge. There will be wins. There will be losses. And you've got to embrace the uncertainty that goes behind it and understand. Like this right here. Looking at his paper gains, paper losses. None of that matters until you actually close the trade. Once the trade has fulfilled its entire life cycle, assuming you have a reason to get in and a reason to get out, that is where you need to be. That's where you need to live. Focusing in on the final outcome, not the unrealized P&L. Yeah. Non-realizing P&L is a hard lesson, right? And if you think about it, right? Think about it this way, right? Seeing a 54% gain turn into a 4% gain could be so demoralizing, so frustrating, so absolutely destructive to so many people. Versus, I'm up 4% in the month. That's great. The average annual yield for the S&P is 8 to 10%. So I'm nearly halfway there in the span of a month. I don't know. I think that's pretty good. Huge difference right there. So I actually think I won't be marking to market until things close, specifically for that reason. I don't want to get y'all all excited. I don't want to get your Joneses all up only for it to happen. And then think of it from the opposite perspective, right? Think of it from the opposite perspective. And this isn't normal. This isn't normal. Yeah. Imagine your open trades were down. Imagine you were down 15% in the month. Oh, that's going to hurt. Every day when you go to bed, oh, I can't believe I'm down 15% for the month. I can't sleep. My wife's going to leave me. Oh, I'm going to have to sell my house to pay for my trading losses. And then what an emotional high you get to when you get just to break even. Oh, yes, we are back, baby. When do I get my Lambo? And then let's say you close it out with a 4% gain. Was it really worth all that extra stress? Was it really worth all that extra sleeplessness? No. So yeah, we're going to start doing that from now on because I don't want you guys getting this misconstrued. I want to help you be successful. And one of the ways to help you be successful is not focusing in on the paper gains that are not yours until they're closed and focusing in on actually trading a plan. Remember, and I love this quote because it's so true, right? If you diversify, control your risk, and go with the trend, it just has to work. Like mathematically speaking, it has to work, right? There's one more quote. Hang on. Pros focus on managing risk, implementing processes, and maintaining the discipline needed to consistently execute their plan, assuming you have a plan. Knowing that if they get that right, managing risk, implementing processes, and maintaining the discipline to consistently execute it, knowing if you get those right, the money takes care of itself. The money will take care of itself. All right. The money will take care of itself. But if you base your entire trading history, on 4 occurrences, think of it this way. If you flipped a coin 4 times, you could absolutely sit on 4 tails in a row. But imagine that, hang on, let's do some imaginations together. Imagine that you had a coin flip that had, every time you won $7. Every time you lost $4. Okay. But you had a 56% win rate, right? So it's not 50-50. In fact, it's 57. 56.9 rounded to 57. And now imagine you flipped 4 tails in a row. That absolutely can happen. Do you change everything? You abandon all your plans because you hit 4 in a row? No. In fact, 43% of the time, you're going to lose. And you can hit 4 in a row 43% of the time. So have a plan, execute the plan, and it makes life so much easier when you understand over and enough occurrences, over a series of trades, you can be successful. 1 trade on its own shouldn't even matter to you. 4 trades on their own, you can take a step back and you can say, okay, is there a flaw in the plan? Or is it just bad luck? It can really be that simple. And then if you look at your plan and you say, you know what? The market just wasn't working for me. It was just bad luck. Versus, oh, there's a flaw in the plan. I need to make a change. This is the type of information that you've got to understand to be a successful trader. You've got all the edge. You've got all the statistics. Now you have to execute, assuming you have a plan. So we're here to help you out. And the way that you can be helped out most, grab your OVTLYR for 82 cents a day and click one of these 2 videos if you're ready to save time, make money, and start winning with less risk. We'll talk soon. I get it. I understand that a lot of people are feeling frustrated right now. I get it. I don't blame you for it. But this is the reality of trading. This is not Lambos and Instagrams and all this stuff. This is the reality of trading. Trading is a slog. Trading is not fun. Okay. If anybody tells you it's fun and it's exciting, you're doing it wrong. Trading is meant to be boring. And there's going to be times where everything just clicks. And there's going to be times where nothing clicks, right? Your job is to realize that I'm going to be there when it works. And I'm also going to be there when it's not working, but I'm not going to let the market take money from me. Right. It's just part of the game. It's just part of the game. I got you, Dennis. Dennis, I'm on your side, dude. I'm completely on your side. I don't think you guys understand. My objective is to make you successful, okay? And for basically 0 cost, right? Can you get OVTLYR and make your life infinitely easier? Yeah. But you don't have to, and I'm still going to do my best to make it easier for you. Doesn't mark to market keep the numbers more realistic at the time, though? Well, marking to market is exactly what it means, right? Looking at your paper gains and losses. In fact, I've mentioned this story before about how I used to do consulting with financial institutions. And I know one that had to collapse. I worked with one directly that had to collapse. And it wasn't because they had to market anything. It was because of their loan losses. But there were 2, one in LA and one in Texas that I worked with, that the regulators came through and they're like, here's the deal. You have to mark. I mean, this was a normal thing. They always have to mark to market their investments. And mark to market means, what would it cost for me to liquidate this today? Mark to market means, if I were to sell out right now, what would it cost me today? Okay. a lot of their investments were underwater, big time, because they went super long in duration when rates were low. Rates went up. Now, nobody wants these. Think of it this way, right? If I made an investment for 30 years at 3.5%, and rates are now up at 7%, and I needed to get rid of that, right? For some reason, whatever the case is, I needed to liquidate this investment. Do you think people are going to pay me 100 cents on the dollar? Of course not. They're going to lose money. They can go out to the marketplace and get twice as much. They can go out into the marketplace and get something that is just as good, that earns twice as much. So when they market to market and the regulators see, ooh, you got 60 cents on the dollar for this, we got a problem. We got a huge problem. That is what causes banks to collapse, is because of poor management of investments. Now, think of it this way, right? When you're marking your mark to market on your portfolios, you're kind of doing the same thing, right? Oh, I'm so stoked that I've got these paper gains and they're amazing. Oh, it's great. But are you going to close it today? Maybe, maybe not. If you are, then it's fantastic. If you're not, you're just like getting hopped up on hopium. I don't know. Just my opinion. Lex is here today. Lex will be here in OVTLYR University today. I'm very excited for that. Mike is a new investor, and he got his backside handed to him this week. I feel like the Joker right now. What do I do? Sell and wait for the rip, or hold on till I can turn, until I turn, and then things get out when I can? Here's the thing, Mike. Right here, and I'm gonna be 100% transparent for you. Whatever I say is going to be wrong. I'm a random guy on the internet. I'm not a financial advisor. I specifically didn't take all my series whatevers because if I had them, I couldn't talk to you about this, right? If I tell you it's time to get out, you should get out. It's going to go up. And Mike's going to come back and he's going to say, Chris, you told me you sold my SoFi shares and it went up without me. If I tell you, no, hang on to it, dude, it's going to come back. And then it goes down further. Chris told me not to sell my shares and it went down further. I'm in a lose-lose situation to tell you what to do, Mike. All I can do is tell you what I'm doing in my plans. I hope that, and that's with as much love as I can give you, my friend. Look at that. Art's up 22% this year. Way to go, Art. How many sectors have buy signals right now in the spot? I actually am curious about that as well. So you can actually see this really, really easily, easier than you would expect. Go over to the watch list page and click this little icon, and it will show you all the sectors. Isn't that cool? I didn't know that for a long time. And I clicked it. I was like, what is this? And then I was like, oh, this is all the sectors. Cool. So a few of them, materials, industrials, energy, and staples and communications. It's about 50-50, honestly. But what matters more to me is looking at market breadth. Looking at market breadth. So go to summary up here. This is what I'm looking for. I'm looking at the heat map. I want to see which sectors are getting more greedy. That's where I want to be. Like energy, financials, staples, and utilities. Now, staples and utilities being greedy, getting more greedy is actually a bad sign. That's a bad sign. These are the flight to safety sectors. So when you see these two sectors starting to ramp up higher, that's bad for the market overall. Chris Chains like SoFi on sale yesterday. He's gonna love it. Oh, you're right. What should Chris Chains go buy some SoFi today? Oh yeah, Chris Chains can afford $20 a share. He couldn't really afford $22 a share when it was up 10% higher than it is today, just a couple days ago. Like literally 2 days ago, it was up 12% higher than it is today. Man, I bet those SoFi bros are opening their accounts not feeling very good right now. This is not the future of finance that I was promised. This is not the future of finance I was promised. The CEO is only going to get paid if it goes to certain levels, and it's nowhere close. In fact, hang on. I got to Google this because I want to know. Let's ask ChatGPT. At what levels is the CEO of SoFi going to get his big bonuses on the stock price? Because I remember watching SoFi videos and that being a thing. Oh, it has to go up to this level because the CEO is going to get the bonuses for no other reason. Okay. For his long-term performance units, 3 price targets, $25 average share price over 90 days. You may have done it. I don't know if it's like starting on X date and ending in X date. Hang on, where's $25? Here. Yeah, legit. It was over $25 for 90 days. That's a terrible structure right there. 35 over 90 day and 45 over 90 day. Okay. There you go. Well, he hit his first bonus. He's getting his Lambos. You SoFi bros aren't though. Okay. All right. Yeah. I'm not just clicking this, Don, because you say Chris is right. Don is competing in the U.S. Investing Championship, by the way. Also a professional investor. Everyone needs to develop a trading plan, whatever that trading plan is. Don't use mine. Use your own. Come up with your own, because the only way you're going to believe your plan is if you came up with it. So that's going to wrap it for me today. Again, the plan is to sell out of all my SGov. I'm sorry, all of my SPXL into SGov. That's the only thing I'm doing today. I know that for sure because I got to sell Signal on the SPY. So I'm literally not going to do anything else. I'm not going to stress about it. I'm not even going to think about it. It's just what I'm going to do. I even have like multiple meetings today. So I'm going to be a busy boy anyway. Don't forget, today is OVTLYR University. We have a special guest lecturer, Lex from Tradier is going to be here. And I'm really excited because Lex claims, and I'm going to be as nice as possible because I do want to learn from him, that he makes money selling options. I was the one stupid boy on the internet who could not have made any money selling options. So I would love to learn how I blew it. And he was obviously smarter than I am. And that's okay. I really, really, really want to learn that. I really want to learn that. That's one of the questions I want to ask. Okay. You guys have a fantastic day. We'll talk soon. Market cycle. It's perfect.
We're pacing the room with the lights turned low, waiting for something we don't yet know. Slow days, low plays, drifting both ways, and nothing's wrong, but nothing's sure. That goes sideways, then it runs. The trend stops, then it comes undone. The market cycle ebbs and flows, exactly when nobody knows. The doors swing open, the air feels new. Every green candle feels earned and true. High tide, wide-eyed, carried inside. Belief through euphoria, all collide. Stock goes sideways, then it runs. The trend stops, then it comes undone. The market cycle ebbs and flows, exactly when nobody knows. The upward trend feels like it's stopping. EMA's begin their crossing. Laid by same highs, dressed up goodbyes. True believers still eulogize. Stock goes sideways, then it runs. The trend stops, then it comes undone. The market cycle ebbs and flows, exactly when nobody knows. Gravity remembers our names. The floor drops out, nothing feels the same.